Here comes the hot stepper. It's James Whelan of Barclay Pearce Capital Management's asset management team. That makes a lot of sense. Yeah, you are joining us for the Theory of Thing Investment Podcast. So once again, I've stuffed up the introduction. I'm joined by Heath Moss of Excellent Investments for the absolute short and sharp Friday afternoon podcast. Heath, how are you now? Go.
Very well, mate. Very, very well. Big week, huge week this week, we could say. So, yeah, let's get
A few
stuck
things have
straight
happened.
into it. Yeah,
A
a
few
few
things have
things.
happened.
Yeah,
Mate, the red
yeah.
wave picked it, called it, absolutely got it out of the way. Mate, let's just go market report and then we'll see what we've got time for. Hit me. What do you got? Show
No
us. Hang
worries,
on.
mate. I will
I
get it
haven't
up.
switched on the thing about the share screen.
Oh, bloody hell, mate. You want this done in
Okay, no,
15
it's all right.
minutes?
It's all right. It's all right. It's all right. It's all right. Two hands for beginners, boys. Okay, no hand signals. Let's go.
There we go. Here we go. Got the screen up. Got the screen. As usual, S&P
Woo,
500. Look at
hot.
that pop. Look at that pop there. I'll probably get rid of that line, get rid of that. But yeah, big pop there on the
That
back
line
of
anymore.
the Trump red wave. Ended up
Yep.
taking the House, the Senate, the popular vote, first time since 2004, and Bush for a
Bang.
Republican. You were bang on. You said this, I reckon, 6 months ago. You said he
I
would
was so
take.
bang on. I'm still going to enjoy myself a regular, original wakey wakey.
I've
I'm
got
gonna.
the
That's
the berry flavor as well, but yeah. So we've seen a big pop in the S&P 500 this
lovely.
week, up 4.3%. That's basically all it's about is the Trump red wave. Nasdaq
Smashing.
very very similar, up
Yep.
4.3% as well. We don't worry
Yep.
about the Dow. The small index cap, Russell. We saw on election day, we saw a 6%. Is that no? That's election day. Sorry, election day. There saw a six
Yeah, you can
percent
say.
rise in the S&P 500. Not the S&P,
Okay.
the Russell 2000, and that was on the back of obviously Trump getting in and his tax cut
Calm down.
mandate.
Calm down. Calm down. Calm down. Take a step. Pump the brakes there, sweet cheeks. Reconcile this for me. You've
Yep,
got Trump, you've got tax cuts potentially, you've got an increasing deficit, US
yep,
dollar up, inflation up,
yep.
rates have already had the rally into it and may
hmm
continue to have the rally into it, regardless of what the Fed is doing with the cut. All of these things, and you've had commodities got hit, but they've sort of come back, so don't worry about that. But none of this is supposed to be conducive to a small caps with all things being even. So this is just purely momentum, consensus, exuberance. Or do you think that
Well,
there's actually that the people are saying that of the wall of things that should be getting in the way of caps, i.e., higher actual real rates?
look, I
What
think I think the higher real rates thing is temporary at the moment. It's obviously on the back of the Trump move. The market was anticipating this a few weeks ago, and we saw. If I bring up the 10 year, we see
this
the 10
guy?
year since this is down here at 3.6%. This is where the Fed cut 50 basis points in September. And since then,
Mm,
it rallied as much as 80 basis points. And it did
mm,
peel off a little bit last night on the Fed cutting another 25 basis points. So I think this is temporary. I think this is an initial reaction to Trump and all things that he's going to bring in, tax cuts, tariffs. Even the immigration could be seen as inflationary simply because he's making the labor force smaller, which means worker scarcity could get
It is
yeah
inflationary. Yes.
could get
Yes.
could get could get harder. Worker scarcity could be harder, and
Mm-hmm,
therefore wages could go up.
mm-hmm.
But having said that, the jobs market is softening, and underlying jobs. If we look at something like permanent job losses, that's at a cyclical high now, and it's stuff like that that the Fed is looking at and wants to avoid that deteriorating any further. So you're going to have maybe this run a little bit harder because this is the bear steepening. Because if you look at the 2 year, it's not running as hard, so the gap between
Mm,
the 10 and 2 is widening, and that's a bear
mm,
steepener, and
mm-hmm.
obviously predicting higher inflation.
Okay.
But the
But
Fed is going to push back against this. The Fed is going to say we don't want rates this high. We want them closer to neutral to keep supporting the economy and have all that moving forward. I think that's what's going to happen, and these rates will moderate. And the Fed will peel back to, I think they'll pull it back to about 3.5%. So another 125 basis points or 100 basis points from where they are
well,
now.
you're gonna have to get Powell out of there with an absolute crowbar. The way that he
Oh,
came straight back. Anyone who didn't catch that in the news, just like if Trump asked you to resign, what would you say? I'd say no.
no,
Bang, bang. End of
no.
story. No more questions.
And nor should he. He's done
Press
it.
conference over.
He's done it perfectly. He's threaded the needle here. He's beaten the inflation. The economy's still doing really, really well, and they're probably on a really good path for the next couple of years at
Well,
least. So
it's got to think about the 4 years that he's just had, effectively battling COVID and then post-COVID, transitory, non-transitory. He's got it done. He's ready to go. Okay, we're at the end of the fourth, and the whole thing's been blown up in a couple of days from one guy getting elected, just because
I know.
because Kamala Harris is a freaking nightmare.
I know.
Anyway.
But anyway, so I think this small caps run was based on valuation, they're a hell of a lot cheaper than anything else out there at the moment.
Mhm.
The tax cuts benefit their bottom line, although only 40% of companies in the Russell 2000 are profitable. And I think see the inflation story and the real rates story is temporary. It is transitory, and you look everywhere around the world, and we have a deflation or disinflation and coming down hard, especially in China and Asia, even in Australia. Outside of services and housing, food prices and all that are all coming down pretty quickly. So.
Yep.
I'm of the opinion that sort of all feeds in. I mean, America is mostly services like us. They import a lot of stuff. Of course, tariffs could jack those prices up. But again, we don't know what's going to happen. I mean, he said he wants to put these tariffs in, but like last time, he said a lot of things and couldn't get most of it done, even the stuff where he could mandate it via executive order. So he's got to appease to his party and people if he wants to get further tax cuts through, if he wants to change any other legislation. He's still going to keep his party happy for the next 2 years to get that done. So he can't. I don't think he'll go. And things like, say, we talk about China and EVs, electric vehicles. He is open to Chinese like BYD, etc., setting up plants in America to build their cars there, so they avoid those tariffs. So things like that will happen. There'll be negotiations, and this will take a little while to play out. I don't think this gets done in the probably first quarter or second quarter next year. I think it'll take a little bit to get done. His tariff stuff.
Okay.
So
no, I actually think it's a head fake, the tariff thing. I think that he's probably not going to go as hard onto that as people may be thinking that he's going to do.
No.
It may lead into some pretty ordinary, just some pretty ordinary outcomes, and I think that that's it. I honestly do think that with the limited time that we have here, I'm just going to say that we're heading into 4 years of US exuberance, US confidence. But more, as opposed to 2016, the adults, it has a feel to it like the adults are in the room now, and then out to prove a point to say, hey, you gave us your trust again, you've given us your mandate again. We're just going to do the things that you wanted us to do, but it's going to be less of that craziness that you saw through that 2016, 2020 era.
I feel like he's got more of a plan behind him this time around. I think the first time he got in, the tariffs were a little bit of a blindside thing, him using executive orders, etc. And, we weren't used to someone being as erratic on social media in terms of being a president of the United States.
Yeah.
But I remember driving in to do an Ausbiz interview, had all my talking points out, got out of the car, got into the studio. They're like, everything's changed. Trump put out a tweet.
Everything's changed.
Yeah, I think it was China trade talks off or something like that.
Yeah, it was. Yeah, those things that happen all the time. I'd be sitting at the desk at Ausbiz, and remember they had to cut into the back of the Chinese embassies, and the embassies were burning documents.
Yep.
And I turned to Scott. Oh, who was I on the desk with? I was talking to Scott and Nadine. And I just went, "Is this what we're talking about?" They said, "Yeah, we're talking about that now." I was like, "What was all this? I've got all this shit in here.
I got all these notes."
We're talking about that now.
That's the world we're heading into again. Although
no, I don't believe so. I mean, they were wild days. They were wild days. You wake up with 3 different news services all telling you something similar on the phone.
Yeah,
and you just go, well, this is what my day is going to be like anymore. Look, it's very bullish for the market. Commodities reversed. Can we just go commodities really quick? Because
we'll quickly have a look at copper. So you can see copper sold off day before the election. No, actually, that was day of election.
That was the day of.
Yep. And then yesterday they bounced. Obviously, we have the Chinese NPC meeting happening right now. I haven't seen anything come through on
the time is 2:23 Australian Eastern Daylight Time.
Yeah, haven't seen anything come through yet, but the rumor is it's a $1.4 trillion package over numerous years and it's more domestically and household focused stimulus, which is exactly what the market's been after. So we got that pump on copper yesterday. I think even oil.
I think that was the best single day of copper in history. It was some insane stat about that. It was reversing most of the day before, but it's still still gonna happen.
And so we still have that to play out. I mean, it looks like they won't release it until after the XJO closes today. But that will be a Monday play. We'll have to digest that over the weekend, whatever they come out with. And I mean, going by their last stimulus packages, it may disappoint. I mean, but I think now that Trump's in and there's the threat of tariffs, they have to go hard. They have to say, all right, we have to focus on our domestic economy. We can't rely on exports anymore because that's what they've been doing, dumping excess supply into the global market. So they can't do that anymore with tariffs. So we'll concentrate on building the services sector over there, which has been, transitioning to something like we or the US have as well. So that's copper. And I think oil did the same. We saw a bounce in oil, or seen a bounce since. Well, actually, did you see the headlines that come out that Hamas immediately came out after he was declared the winner and said, we want to negotiate a peace deal? Yeah.
Yep, they want to negotiate peace. Zelensky's and Putin, they're talking about peace being potential. It's on there.
It's remarkable.
We're entering a new age because they know that Democrats love. If they get a bit of trouble at home, a Democrat will just love blowing up people over in that part of the world. And it's like he's there. He doesn't get off on it. It's not his thing.
Yeah, and that was the last thing in 2016. It was like Trump's going to start World War III, and it was quite the opposite. We had no conflicts. They had a few strikes like against Syria and stuff like that, and they're very direct and one-offs, and took out
the Moab, the mother of all bombs. Yep. Remember that? That was and it was like, oh, and it was just like, no, that was the one.
Yeah,
we've set the tone.
So, oil's responded over the last week and looking a lot better. Gold, we hit a peak of 2,800 an ounce last week. Sold off.
You're a buyer of gold there.
Yeah, look, I'm not fully convinced. Yeah, it all depends on these yields. I mean, if they keep on going higher, they keep on going higher, then I think gold is going to succumb to, which it has over the last couple of weeks or so, higher yields, higher US dollar, which it's ignored for the last year. So I'm wary, but I think gold equities now they can start rolling over hedges to a lot higher levels, and they'll start to be re-rated by broking agencies, etc., because of that. And the cost of producing gold is also leveling off or falling now. So their margins should continue to remain wide, and free cash flow fantastic. So that's that. US dollar, we all know its strength. Look, big candle on yesterday.
That's going to be a real issue. That's going to be a real issue coming up.
Headwind for earnings, but it's disinflationary. I mean, it helps fight against inflation, a stronger US dollar. So
that's a good point. I've been throwing it off the cuff, just saying all this stuff is going up. It's bad. That's something that I've taken very little into account. And thank you for reminding me of that.
But again, I don't think this. I think it comes off with yields and that. It's just that the market is starting to factor in. Okay, where are yields? Where are rates going to bottom? And that keeps on getting brought up a little bit higher. It was 2.8%. Now it's about 3.5%. Heard 3.8% the other day as well. So, it'll be interesting. But that's the long and short of it. I think we've just got to wait for those Chinese numbers and decisions to come out from the NPC meeting.
Well, anecdotally, thank you for that, Heath, with the market wrap. Fantastic work, and I do look forward to just seeing some sort of a number in one spot telling us exactly what is going on in the Chinese area with regards to stimulus, because right now it's just stuff all over the place.
It is.
Anyway, very smart money sort of saying that. That's me repeating that. Coldplay last night. Thank you very much to the boys from Coldplay for entertaining us as they did. Very funny thing, and the anecdote is hilarious. So it was a little bit wet in Sydney last night. Yep. I was out there with the girls. The wife and my youngest was there, and my niece. Yeah. My brother's daughter. Anyway, and the whole thing is run on renewable. So we're powered by renewables. We've got people who charge the batteries for the concerts. It's all solar powered. Everything that we do is net zero. We travel with where we can renewable fuel. The back is burning with biodiesel that's burning out the back, or it's a reused oil, cooking oil. All fantastic. Anyway, halfway, Chris Martin said, guys, we've just had a little bit of a glitch. The technical, something's going on. We just got to restart the whole thing. Something's wrong. It was funny. I'm sure that it wasn't related to the two things, but it was just like it didn't sound like it was a problem you get on the grid, mate. Anyway, Coldplay did a great job. It was fantastic. They carried on the rest of the show, but they did that. They just
how did they get it? Obviously by private jet. They
I
get
don't
to
know
go
how
to
they.
Australia?
No, I
'Cause
think that anything that they do with regards to the travel, they offset as best as they can.
yeah, yeah, because
Um,
they said a couple of years ago that they was done touring because they were aware of the emissions they're putting out via their private jet, yada yada. And I thought, okay, and then they announced a tour to Australia. I'm like, okay, so they're giving up on that.
Yeah, well,
So
you got to do what you got to do, right? They've got
yeah,
these huge partnerships with DHL and SAP, and I think they use whatever they can to offset it. I do have to go though, Heath. What have you got
no
for us
worries.
last minute?
That's it.
Anything?
My only NFL tip this week is Tampa Bay to cover the line versus my 49ers at 6.5, paying $1.86. I
Done.
think Tampa Bay have been doing all right, even with their injuries, and my
All right,
49ers are a little bit average.
I got Tonga to cover 17.5 points against Australia in the NRL
Oh,
finals this weekend as well.
beautiful.
Tonga beat
Fantastic.
New Zealand. They're a good team, lots of heart. Thank you, everyone. You've been joining us for the Theory of Thing Investment Podcast micro episode. We're going to be doing this every fortnight now, making it bigger and better. But just as we're trying to iron out some of the wrinkles, we're just making these things, just getting it done and making sure that we've got some good information in your face. Any questions, just let us know. Thank you, Heath.
No
Mark
worries.
Well.
Thank you. Have a good weekend, everyone. Bye.